Hey there traders, David here of TradingFibsMarketFi.com to bring you a current insight in-depth look at the trading the trend strategy for the oil stocks, ETFs, and futures. As always, these videos are for educational purposes only, to support your knowledge in the market and see what's going through my head on any given day. And it's all about the oil as we continue in this article that I wrote back in January 9, 2015, posted here at seeitmarket.com. You can also find this post at MarketFi and Trading Fibs blog site. And after a rundown, major rundown in the oils after those major highs, the question is it sale time? And there was a call, yes. We're not going any higher where it's all going lower, and so opportunity to simply pick him up at the lows. And so writing this article back in January, looking for positions to go long on the following ETFs and to go short as the stocks had written a little bit higher there. And so the question is looking at the futures on a daily chart, key levels to be looking to the downside, and the question would be, what would be the key entry in coming upside is, first of all, looking for a crossover in trend. And so the trading fib strategy at that time was an 8-period moving average crossover followed by Heikin Ashi bars, solid body and tail up, looking for the 534 moving average crossover in unison, and then long-term trend would be played out by a 5 above 13, 21, and 80. And so writing that back in January, taking some positions here on the MarketFi portfolio, as we could see right here. Not doing so bad so far, from the low of 5.48% increase on the DBO all the way up here to 54.39% on DWTI, short at 161.33, now holding price at 73.59. How can you go wrong there? So let's take a look at where the positions are, where's the futures, and what are some key opportunities. Again, the modified trading the trend strategy has changed slightly. We've replaced the 8-period moving average with the T3 moving average, a little bit of a smoother trend moving average that you can see here on the green bar, and we replaced the 534 with these dashed lines. And again, what will be the strongest trend that crude is continuing upside? Well, it will be a 5, it will be a T3, be a 34, all holding up above the 80-period moving average, just giving us the strongest trend possible. And as you can see here, Heikin Ashi bars, solid body tail up, showing everything's been in trend here ever since back here at around the towards the end of March. So, bad look on the daily chart for some of those who aren't intraday traders, being able to take a look at crude, maybe holding on to a position for some time. Or for the swing trader looking to hold on for a couple days, what are some key entry points, as they will still match up? We have a daily chart on the right here, 100-tick range chart on the left, and again, intraday trading can be easily done on a 100-tick range chart, or falling to a 10-tick range chart. Going to give you a lot more chop there for ins and outs, but a 100-tick range chart, very nice, smooth, not a lot of chop, and gives you plenty of opportunity over the course of a couple days. And sometimes if you get a lot of movement in one day, surely offers you a couple bars upside. Again, you can cut that down to a 50-tick range chart. Obviously, you'll have more possible entries. So, where was that entry on the daily? Crude was back here right on April 6th, is what you had a 534 crossover the day prior, waiting for the solid body close tail up, and perhaps even a breakout over here at 52.48 as price action ended up pushing to the 80-period moving average, sliding sideways and coming back upside. But again, by all standards, this was a strong uptrend move in the oil market, and you would be on this trade since back here on the crossover, the close here at around 50.84 with the price now around 57.62. Nice healthy ticks. And if we jump over the 100-tick range chart, so the question is as well, this continues to run up. How do I get in on this? Well, you look for pullbacks, just like we see here. Solid bars, Heikin Ashi bars coming back down and then pushing back upside. So right here, as you saw price action, the earlier entry actually on a 100-tick range chart would have put you in this on March 24th. Here on a daily chart, you would have had to wait until April 6th. So same strategy, just come back here to March 24th, and you had a solid body tail up 534 crossover. Your trend was already upline on the T3. All right, and price action pulls all the way up, pulls back, and then boom, there's your entry right there on April 1st, even a couple days before, April 6th, a couple days later. Waiting for another pullback is a re-entry right here back on April 13th, and it's been an uptrend. As you can see, we've been going through a pullback as of today, April 20th, waiting for a solid body, tail up, breakout above 58.65. See if this can climb any higher. Again, you can go down to a 50-tick range chart here if you want to get more opportunities through the daytime, or even go to a 10-tick, but again, that's going to end up chopping you up a lot. Here we throw up a Fibonacci target. Fibonacci extension, point A to point B in the retrace. All of a sudden you have yourself a trade management tool. As we could see, crude after the pullback, about a 38% pullback, solid body tail up is the most conservative approach here. On April 1st entry with a stop down here at 47.02, Fibonacci target 1, 52.06, bang, pow, hit. Slides sideways for a couple bars, pushes upside, comes back down. Where's your stop at this point? Your stop is down here at your entry at 49.58. Stop never taken out. As price action moves up towards 57.10, you move your stop now to 52.06, or at least half the distance. And watch the pullback here. And if price continues upside to 59.82, you take your position here at 57.1 as price continues upside. That's trading the futures. Now let's jump over to our ETF opportunities, as we see OLO, our first opportunity here on ETN. Very similar in price action as we see the solid body tail up crossover here on April 14th. Any earlier entry, let's go ahead again, just like we had in the crude, come over here. This is a 10-tick range chart. 10-tick, as you can see, a 100-tick range chart doesn't move as smooth there on the crude. But again, 10-tick range chart offered you several re-entry opportunities. If you come back here, April 14th was the first opportunity on a daily. But if you look at the 10-tick range chart, we had several opportunities, as we could see price action after that drop down in March. All right, 534 crossover all the way back here on March 20th as price action pushed upside, came back down, re-entry, and as of the latest within the last couple weeks, as we can see price action continuing to the upside here, re-entry right here on April 2nd, re-entry right here on April 9th, re-entry up here or on the breakout, 416, and here we go again, possible re-entry here as of today, April 20th. Perhaps maybe you want to wait for the breakout above 1226. And likewise on the crude, what do? You go ahead and set yourself up with a Fibonacci target, taking the lowest low. Let's get a Fibonacci extension drawing right there. Boom. So we take the lowest low, our first initial entry right there. Put us with fib targets to the upside, but again, since then we've had a little bit of a bounce, so I'm going to go ahead and take the low from here up to the high here and bring it back down a little bit more manageable. There's your retracement, and boom, what do you have? You have a Fibonacci target that stalled right here at the 1206, bounced around a little bit, and that's where we stand on a Fibonacci. But again, the entry, you don't even have to don't have to use the Fibonacci, just simply using the 534 crossover, waiting for the pullback, coming back upside. What do we see here? This is exactly the picture we're looking for in the crude. A 5 above the T3, above the 34, and above the 80, like we had done right back here in the original article, looking at, that's right, looking at the moving averages when we're looking for something a little bit stronger. 5 above 13. I can't get that to maximize. All right, so 5 above 13, above 21, and above, in this case, we want it in the other direction, but as you can see here on the moving averages, they're all in sync, and that would be the strongest move that possible, as we could see here in the oil. Oh, actually, I apologize. This is OLO. Let's go back. We'll come back to that on the oil, as I'll post that up here. Thank you, Avast, for letting me know. All right, USL, here we go. United States 12-month oil. As we can see, price action broke upside here on the 534 crossover. back here on April 6th, like our crude, and it has been pumping upside everywhere ever since. So what do? We go to a 100-tick range chart or an intraday, possibly 50-tick range chart or 10-tick range chart to get the intraday on a pullback, and then to the upside again, looking for all moving averages in sync. And here's our OIH Vectors ETF. Same entry here on the crossover on April 6th. No earlier entry. Waiting for a little bit more secure entry as 534 crossed and the trend was in play. And now, as we can see, 5 has crossed the 34. The 5 and the T3 have crossed above the 80, waiting for the 34. Even a possible pullback and re-entry to the upside if you have not gone in on this. Again, pullback coming here, 5 underneath the T3, offering an opportunity for a pullback. But all this in trend. That's right. T3 moving average plus your Heikin Ashi bars gives you a trend in play. DNO to the short, obviously, that's right, to the short at this time as we were at the highs here. So coming back down, as we could see, Heikin Ashi bars crossover right back here on April 2nd, April 6th entry bar, 5 and T3 underneath the 80, waiting for the 34 to catch up. What you're going to be looking for is a possible pullback and then re-entry, or at least perhaps a 5 crossing the T3 and then coming back down. So there's our DNO. There we go. OIL, that's right. Our crossover back here on April 6th, very much like our first stock that we were looking at. And so what do? We go to the 10-tick range chart, 10-tick range chart, and again, offering new opportunities with Fibonacci extensions. Several opportunities to get back in on the setup for 12, 4.9, and back up here in 4.16. And again, if this is if your trading style is to get in and out, obviously you had some great opportunities riding the Heikin Ashi bars all the way up. You can wait for the 5 to cross underneath the T3 with a solid body tail down and exit your trade right here at 11.16, perhaps taking some profit along the way on these indecision candles. But again, using the Heikin Ashi bars to keep you in the trend has been a wonderful move here on the oil. And as you can see here on the daily chart, for those of you that tend to stay in your trades a lot longer, let's move over to the DTO. 534 crossover back here on April 6th. Finding a pattern here. Again, your question is, well, why didn't I take the entry back? Why wouldn't you take the entry back here? Well, you could have gone in early knowing that price action, really pumped a little higher, but unable to hold it once it came back down. But again, looking for the more conservative entry, confirmed, solid body tail down, 5 underneath the 34. These are the dashed lines coming underneath the 80 period moving average. And so again, we're looking for a pullback on this if you aren't in this yet for the confirmed entry. What a run down on UDWTI. Talk about a high all the way down to chop at the lows. So anything down here around the $2 zone here. And what do we have now? We have a price action that's breaking upside. Possible good entry on a daily. And there you are. Solid body tail up on 415. Holding up a little bit here, not able to break to the upside yet, but 5 is holding above the T3. T3 is in 10. You've broken above the 34 period moving average. As long as the other stocks are just like your crude is moving up, we got a little bit of a ways to get all moving averages in trend, but at least for now, early entry here, your stop most likely down at the most major swing size low, which would be about at $1.77. You can move it up to here. We're going to pull back around 219 would be the lowest stop I would go and let this give some room to run. All right, here on the what is this? That's the DWTI. We had the UWTI. I apologize if I got that mixed up. On the DWTI, again, similar picture to what we saw before, 534 crossover downside. And you had the 534 cross again with the T3 moving average. Check that out. You could see the solid red down here, T3 moving average, and pullback, and an entry crossing over the 80. And right here, just today, starting to get a trend to move to the downside, but watching price action kind of holding up here. And you got a 5 now right above the T3. I would wait for any more action to go downside for that 5 to cross downside underneath T3, and you got yourself a powerful move to the short. Here we see SZO. As we can see, same crossover here, 534 crossover back here on 4.6. Entry bar, solid body tail down. Stop would have been up here at 71.8. Further stop would be major swing side high, 75.6. Got a 5 underneath the T3, waiting for the 34 to catch up to be underneath the 80. SCO is price action. Same picture to the short as price action rose up since November. And as we price action come down, and again, you might be taking a look at, hey, you know what, where's my 50% Fibonacci? How do I manage this trend on the way down? Well, as long as you have solid body Heikin Ashi bars coming downside, you remain in the trade, taking off contracts along the way, and eventually watching your moving averages for the crossover upside, and then going ahead and possibly coming out of your position. Here we have UCO after a run all the way down, just like the crude oil, ProShares Ultra. Crude oil 534 crossover back here on April 7th. 534 crossover. That's right, on April 7th. Earlier entry on a 100-tick range chart would have gotten you in a couple days prior. Stop would have been down here at the swing size low, 676, or back down here at 587. So what are you looking for? You're looking again for a pullback of the 5, or go to a lower, go to a 100-tick range chart, 50-tick range chart, anything lower to get on an intraday to remain in the daily. Here we are at DBO ProShares of the oil funds, looking like we have a similar pattern here as we've seen a couple updates on the oil funds. Crossover here, waiting for an entry. We'll be looking for a pullback on a smaller time frame, 100-tick range chart, 50-tick range chart. Trying to get this all in unison to the upside. Here we are with the USO. USO, again, having a nice crossover. 5 T3 coming up here to the 80, holding up at the 80 period moving average. See if we can hold this up. If any pullback occurs, again, we'll be looking then for the re-entry to the upside if you were never able to get in on any of those. So that there, my friends, my Jedi traders, that is our position. As we can see, we're holding positions here on the Market 5 portfolio, which has been doing quite well. Perhaps we get a pullback, perhaps not. I can't tell you what's going to happen. All I can tell you is timing of the trend and good management. Good management is always looking back over your trades. Take a look at your moving average. Very simple strategy. This works on any market, any chart, any time frame. You want to trade the dailies, you want to trade the 100-tick range chart, 50-tick, you want to get this down to a 10-tick range chart. It's up to you. All I have on here is 4 moving averages. I have a 5, 34, I have a T3 moving average together with an 80 period and my Heikin Ashi bars. Good enough for swing trading or daily trading. That concludes today's in-depth analysis of the oils. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My mantra is to know one thing and know well rings true for all markets, whether you trade the ETFs, stocks, options, or the futures. My plan will keep you disciplined. You can find me every day on Twitter at TradingFibs, TradingFibz. And as always, I leave the crystal ball to the experts. I only trade what's in front of me, and on my charts, have yourself a blue zone day.